Hello, friends. Thanks for tuning in to Master the Market. So, last week, interest rates kind of ticked up a little bit from the best levels. It feels like we've moved from extreme volatility to maybe a little bit of complacency, and the market is still being held hostage by what's going on in Iran and this conflict, as well as, of course, energy prices. And so that leads us into this week. And so, while the Iran conflict is the main driver, this week we have the Fed meeting, and it's Mr. Powell's last Fed meeting. And what we'll be watching for is, do we get a nice soft handoff? At the last Fed meeting, Mr. Powell said that inflation expectations remain well anchored. And that means that you and I don't think that inflation is going to be a problem. That was a nice move. And that actually helped rates improve a bunch when he said that. So we'll see if something like that emerges. And then, of course, we have the Fed's favorite gauge of inflation, Core PCE. We have GDP. And lastly, you have to watch technicals. You have to watch the charts. Mortgages are going to maybe endure a very creepy signal called the death cross that we're watching very carefully. And of course, if you're watching the 10-year note, which you should now that yield spreads have narrowed between mortgages and the 10-year note, you have to watch 435 on a 10-year note and 420. That's the range. Listen, have yourself a great day, great week. We'll talk to you soon. Bye for now.